Welcome to Tax Insights, presented by Hawkins Ash CPAs.
Good morning, everyone, and welcome back to the Tax Insights podcast. I'm Dave Fox, and today we have Charlie here to talk about R&D tax credits. Charlie, want to start us off?
Yeah, thanks, Dave. When most people think of the research and development credit, the first thing that comes to mind might be a person in a white lab coat in a laboratory. However, what if I told you that the IRS thinks of research in a different way? That through research and development, there is a potential to significantly reduce your tax liability. Since its adoption, the R&D tax credit has been one of the most significant resources used by companies in a wide range of industries to maximize their bottom line.
Charlie, can you give us some examples of industries that might have R&D activity?
Yeah, absolutely. To start, manufacturing is a slam dunk. Really, for that industry, it's not a question of if, but how much. Other industries that are likely to qualify for the credit involve their architecture, engineering, construction, software, food and beverage, agriculture, tool dye, and life sciences. Just from that list, you can kind of see that the R&D tax credit is not just for businesses that have people working in lab coats.
So why go through all this? I mean, what are the benefits of the R&D tax credit?
The real benefit is the R&D tax credit is one of the most substantial incentives under U.S. tax law. For example, if a business has just like $100,000 worth of qualified R&D expenses, we would expect them to receive a credit between $6,500 and $8,500, and that's just for federal. There's other state incentives as well out there, depending on where you're at. The expenses that are used to calculate the credit can be deducted just like normal, and then those same expenses are then used again to calculate the credit. It's one of those rare occurrences where you're able to double dip on deductions. In addition, unlike just like a standard deduction that most people get, it's a dollar for dollar credit against your tax liability.
So there's got to be a catch here. Otherwise, everyone would be claiming, hey, I created something new.
Yeah, you're correct on that. That's why the IRS came up with a four-part test that needs to be passed in order for the research to be qualified for the credit.
Okay, 4 parts. So what are the 4 parts of the test?
The 4 parts are that the research needs to be for a permitted purpose. There has to be a process of experimentation. There needs to be an elimination of uncertainty, and the research needs to be technical in nature.
So that sounds easy enough, but maybe you could expand a little bit on some of those areas.
Oh yeah, absolutely, and I'll touch on each one individually here. Let's start with the research needing to be for a permitted purpose. This means that the taxpayer must intend to apply the information being discovered to develop a new or improved business component, eliminate supply costs, or eliminate labor costs. A business component is any product, process, computer software, technique, formula, or invention which is to be held for sale, lease, or used in a trade or business of the taxpayer. For example, this might be a door manufacturer who makes fire-resistant doors. The current doors are good at holding back a fire for, say, 15 minutes, but they think they can change the mix of materials in the door. They could hold them back for up to 20 minutes. Next, the research has to have a process of experimentation. That is a process designed to evaluate one or more alternatives to achieve a result where the capability or method of achieving that result or the appropriate design of that is uncertain at the beginning of the taxpayer's research activities. Really here what you're looking for is something along the lines of prototypes, models, and trial and error that look at different processes, designs, or materials. The third test that needs to be passed is there has to be elimination of uncertainty. This boils down to just having a chance of failure on the outset, discovering information to eliminate it, and trying out alternative solutions. Really, the R&D tax credit lets you kind of celebrate some of those things that you had in the closet and failed at. You get to bring them to the light and use them for this credit. With this elimination of uncertainty, most often we see this as we know we can do it, but we just don't know exactly how to get it done. And then finally, the last test needs to be technical in nature. This means discovering information that fundamentally relies on the principles of hard sciences such as physical, biological, computer sciences, and really rules out soft sciences like marketing, accounting, and business administrative activities. That's really, the 4 parts to that need to be hit to have the expenses qualify for the R&D tax credit.
So other than these soft sciences that are excluded, what are some other options that we should look out for that maybe wouldn't be included as well?
Yeah, there are some other, specific exclusions that are associated with expenses that can't be used to claim the credit. This would include any research that's done outside of the USA, funded research, and an adaptation of an existing business component. To touch on that first one, to touch on the funded research, that's where the research is where the taxpayer does not have the rights to retain the results of the research, or someone else is contractually obligated to pay for the research, even if the activities fail to produce the desired result. Really, what you're looking for there is you need to be on the hook if something goes wrong. As far as adaptation of an existing business product, it means you just can't take something and shrink it 3 inches and call it research if it doesn't really change the product at all. It's got to, have some uncertainty to it that it could fail. If, like I said, if you're just shrinking something, it's the same build, just a little bit shorter, it wouldn't qualify. That's really all I got.
Well, thanks again, Charlie, for being on today. Thanks everyone for listening to the Tax Insights podcast with Hawkins Ash. If you have any other questions about this credit, please feel free to reach out to your accountant at Hawkins Ash or check out our website.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs. Part of your business, part of your life.